Hey, this is Warren Redlick. Shots were fired. Rob Maurer kind of shot at me. He didn't mention me by name, but this is a little bit of Rob Maurer. I love Rob Maurer, but Rob Maurer versus Warren Redlick about Lucid Motors. Are you ready? Let's go. So the shots were fired by Rob. I've taken shots at Lucid Motors, plenty of shots at Lucid Motors. This is not about Lucid Motors. This is now about Rob versus me. Rob had this in a recent video where he kind of took a shot at me, although he didn't mention me by name. Listen to this.
Just wanted to comment on something that has been, I don't know, making the rounds a little bit. I'm not sure exactly why, but...
So the why is me. I had this tweet about Lucid Motors cash flow. This was a tweet I did a couple days ago, and this tweet got a lot of action. A lot of people paid attention to it. Probably over 100,000 people saw this. I'm the one who started this. This is why I'm saying Rob is shooting at me. Maybe not on purpose. Maybe he doesn't know it's me, but he probably knows it's me. Anyway, listen to more about what Rob has to say.
Conversation about a statement in Lucid's 10Q quarterly filing. It says that, quote, "We do not expect to achieve positive cash flow from operations for several years, if at all," end quote. All right, look, there are plenty of reasons to be critical of these other EV makers. This is absolutely not one of them. Don't go through 10Q filings hunting for normally disclosed risks and try to make them into some sort of a gotcha type of statement.
The problem here is that this is in direct contradiction to something that Lucid said 7 months ago. I'm going to show you that in a minute, but let me let Rob go on.
These are very normal statements for 10Q filings. Go back to Tesla's first 10Q. Here's a statement from that. Quote, "If we are to ever achieve profitability, it will be dependent upon the successful development and successful commercial introduction and acceptance of automobiles such as the Model S, which may not occur."
So this is a very common thing that Lucid supporters will do, is a false equivalency between Lucid Motors and Tesla. So we're going to cover all this. Let's start with Lucid's cash flow statement. This is my tweet. This is the actual statement. "We do not expect to achieve positive cash flow from operations for several years, if at all." Let's be clear. They didn't say there's a risk we won't achieve positive cash flow. They didn't say we might not achieve positive cash flow. They said we do not expect to achieve positive cash flow for several years, if at all. Why does this matter? Because 7 months earlier in July, this is Lucid's slide deck from July about their projection for the SPAC merger. These are their numbers that they put forward for the SPAC merger to get people to approve the SPAC merger, to get people to vote, to get people to invest in Lucid Motors and Churchill Capital. They projected gross profit in 2022. They projected over $1 billion in gross profit in 2023, over $2 billion in 2024, over $3 billion in 2025. They predicted EBITDA gross profit, or EBITDA profit, effectively, of $600 million in 2024, $1.6 billion in 2025. And they predicted positive cash flow, positive free cash flow in 2025. 7 months ago, they expected positive cash flow in 2025. That's the key distinction. 7 months ago, they expected positive cash flow, and now they don't. Quick update here. I posted a draft of this video for my supporters on Patreon, locals, and YouTube channel exclusive content members. And I got some feedback, and I went back and looked at the numbers from before, at their disclosures from before, at their earlier 10Qs, and at their SEC filing for the SPAC merger. And the same language about not expecting positive operating cash flow is in all of these disclosures, going all the way back to the SPAC merger disclosure, the one that's filed with the SEC, not the slide deck that's presented to investors. Sophisticated investors would presumably read the SEC filings carefully, but not every investor is sophisticated. They used the same language about not having positive operating cash flow all the way back. So it's not that that changed. It's that at the time that they were doing the SPAC merger, they said in the presentation slide deck to the suckers, we're going to have positive free cash flow going forward. While in the SEC filing, they were saying, we don't expect to have positive operating cash flow. Now, an important distinction here is positive free cash flow and operating cash flow. What we've got here, this is there from the slide deck, and you can see EBITDA, which is not operating cash flow. They projected positive EBITDA in 2024. They predicted positive EBITDA in 2025, higher, negative in 2023. So we're only looking at 2024. And you can see free cash flow is still negative in 2024. Free cash flow is positive in 2025, 4 years after the presentation. But when you look at 2024 and you say, okay, take out total capex, which is 1784, you end up with positive operating cash flow. I'm not claiming I'm an expert on the accounting, and they didn't include operating cash flow by name in the slide deck. But as I understand it, you have, when you take out the capex from your free cash flow, this is a negative capex of 1.8 billion. They're spending $1.8 billion on capex in 2024. And you've got free cash flow of negative 1.5 billion. So this would actually be positive operating cash flow in 2024. So for them to say we do not expect positive operating cash flow in the next several years, if at all, in their slide deck, they said we do expect positive operating cash flow in 3 years. Was there a change in their expectation, or was this just a lie? I mean, or was the SEC filing overly cautious? It's odd that you would have your SEC filing. And then here's the answer, right? The answer is they should not have made these claims in the slide deck because these contradict the language in the SEC filing. And this, again, you know, we have a potential class action for claiming you're going to sell 6,000 cars in 2021. A week later, changing it to 577. Of course, we get to the end of the year, it's 125. So there's a potential there's already class action lawsuits over that claim that was made in the slide deck presentation, and the claim that was made before the SPAC merger. Now you've got this. This is another potential class action lawsuit, right? You said in your SEC filing, we do not expect positive operating cash flow for the next several years, if at all. In your slide deck, you said we do expect positive operating cash flow in 3 years, and we do expect positive free cash flow in 4 years. So this is a big contradiction, and it's not appropriate. The whole point of having all this stuff is to not deceive unsophisticated investors. And for the SPAC merger, their slide deck said something directly contradictory to what they said in the SEC filing. This is a problem. That's the big deal. If they had said in their SPAC merger, hey, we never know when we're going to become profitable, we never know when we're going to get positive cash flow, okay, but that's not what they did. And that's a contrast between Tesla's IPO. Tesla in its IPO did not say they were going to have positive profits in the near future. They didn't say they were going to have positive cash flow in the future. They expected ongoing losses. Rivian, comparable time frame. Rivian, I don't remember Rivian forecasting profits at any particular year or positive cash flow in any particular year. Lucid went out of their way to make this claim, and now the evidence is that that claim is not something that is backed up. This matters in part because of Peter Rawlinson, the CEO. How does he get compensated? He gets compensated by closing the merger. He gets compensated by achieving certain market cap goals. That's what the documents for the merger say. That's what the documents for Peter Rawlinson's compensation say. That he got 4 or 5 tranches of the CEO performance restricted stock units representing 14 million shares, or in the ballpark of $300 million for achieving market cap goals, not for achieving operational goals. And people said, oh, it's the same thing as Elon Musk. It's not the same as Elon Musk. Elon Musk's compensation was based on successful launch of the Roadster, extension of sales to Europe, early success in building a brand, and then they created new incentives where he gets a quarter of his shares upon completion of a car, the Model S, right? They'd already delivered Roadster. They'd already delivered Roadster, like 900 some Roadsters before they had their IPO. Lucid hasn't delivered 400 cars yet, and they're worth $37 billion in the SPAC merger. Quarter of the shares on the validation prototype, a quarter of the shares when they when they complete a production vehicle, and a quarter of the shares when they complete 10,000 Model S production vehicles. Right? Elon's package is based on actually delivering results, right? Here's more. Here's the 10 milestones for his more recent, not the current stock compensation award, but the previous one, the one in between the earlier one and this one, for the 2012 performance award package. Complete the Model X Alpha prototype, complete the Model X Beta prototype, complete the Model X production vehicle, Model 3 Alpha, Model 3 Beta, Model 3 production vehicle, gross margin of 30% or more for 4 consecutive quarters, aggregate vehicle production of 100,000, 200,000, 300,000 vehicles. Elon's package is based on achieving goals related to making cars. Peter Rawlinson's compensation was based on pumping the stock, and that's what he did. And that's the result that he got. And if he can pump that stock up a little bit more, he gets even more stock. He's not motivated by delivering vehicles. And what do we see? Their recent numbers, they delivered 125 vehicles as of December 31 with over 300 customer deliveries to date. That's as of February 2022. They're achieving nothing. They're way below what Tesla had when Tesla delivered 900 Roadsters and had a $1.7 billion valuation. They got a $37 billion valuation with 300 customer deliveries. And they delivered, if you work these numbers out, they're delivering 100 vehicles a month. Tesla's making 100 vehicles a day in a factory that isn't even open yet. The Model Y in Berlin they're producing 100 Model Ys a day in Berlin. The factory's not even open yet. Another thing is they reduced their production plans for 12 to 14,000 vehicles. Their previous plan was to deliver 20,000 vehicles to customers, not produce, but deliver to customers 20,000 vehicles. Now they're down to 12 to 14,000 produced. And there's another key detail here. They had an agreement to spend $800 million to produce battery cells. This is a critical detail here that I missed the first time I made a video. Their battery commitment is $200 million a year. It doesn't grow by year. Their plans were to grow vehicle production by year. Their plan to grow vehicle production was more vehicles in 2023 than 2022, more vehicles in 2024 than 23, more vehicles in 25 than 24, and they're supposed to deliver like 100,000 vehicles in 2025. Why aren't they increasing the number of batteries they're buying each year? Why is it a flat $200 million a year? That's like 67,000 vehicles total, or 17,000 vehicles a year. That's the number of vehicles they should be delivering in 2022, according to their previous plans. Were they only planning on delivering 17,000 vehicles in 2025? These are major holes in their plans. So again, I love Rob Maurer. I think Rob is not as deep into the problems with Lucid Motors' story, the lies they told before, the reality as it becomes reality now. Nobody thinks they're going to deliver 12,000 vehicles in 2022. They don't expect to increase the ramp significantly in the first half of the year, so somehow they're going to deliver a huge volume of vehicles in the second half of the year. Nobody believes they're going to do that. So Lucid Motors is constantly exaggerating what they're doing in order to pump the stock and try to keep the stock alive. And they got this ridiculous factory in Saudi Arabia that makes no sense. So I love Rob, but I don't think Rob is deep into what's going on with Lucid Motors, and I would love to talk to Rob. Rob, if you're watching this, I would love to talk to you. Let's have a conversation. I want to hear what you think about Lucid Motors and why you think I'm wrong. For everyone else, please check out the t-shirts on elandbits.com. Please check out my other videos. Check out my locals channel, warrenredlick.locals.com, and thank you so much for watching.